Okay, we are going to kick off our next section with sticking on the small business theme. And one of the things I love about this industry is that we find people who they haven't spent their career in financial services. They've done something completely different. Our next speaker was he actually owned a gym, and he wanted to expand his gym. Went to try and obtain a loan for a successful, profitable company, and found he couldn't do it. And he tried to apply for a loan not once, but many, many, many times. And suddenly he realized, wow, this small business lending thing is broken. Rather than just accept that, he decided to do something about it. And he created a small business lending operation, which is now Funding Circle USA. So ladies and gentlemen, could you please join me in welcoming our next keynote speaker, Sam Hodges from Funding Circle USA. Okay.
Perfect. So first off, thank you to Peter and the other organizers of LendIt for having me here, and appreciate all of you spending a couple minutes with me here on a Tuesday morning. You know, as I think about the topic that Peter's asked me to speak to, which is the golden age of marketplace lending, what I actually think of is actually going back to our roots. And as Peter mentioned, my co-founder and I here in the US, we were small business owners. I also think about actually the first borrower we served in the US, a guy named David Silverglide. Dave is a very successful entrepreneur. He started a company called Mixed Greens. Many of you have probably eaten there. It's a great multi-unit salad company. And the reason Dave came to us was we offered an experience where, as opposed to the weeks and months it might take to get a bank loan, instead he could get a loan through us in a matter of days. But as I think about the golden age, as I think about where this industry can head, I actually think about credit that takes seconds, not hours or days. And as opposed to the few investors who invested in Dave's business, funding the loan that he ended up receiving, and now is actually fully paid back, I think about that loan getting funded from a broad network of investors spread all over the world. It could be a pensioner in London, a hedge fund manager in Sydney, or a family office in New York, all simultaneously through a global electronic platform, putting money to work that's priced appropriately. And that ultimately, for Funding Circle, is what I think the golden age will look like. This truly global marketplace that drives investment capital to the small business owners who need it the most. So as we turn to talk a little bit about the golden age, I guess I want to address really two things. The first of which is, what are we up to at Funding Circle? And the second is how we as an industry can ultimately get there. Funding Circle over the past 6 years has grown exponentially. We focus exclusively on lending to small businesses and currently do so in 5 different countries: US, UK, Germany, Spain, and the Netherlands. By the numbers, inception to date, we've lent out over $2 billion to great small businesses all over the world. 15,000, in fact. And to do that, we've brought in money from over 45,000 different investors, a mix of retail, individual investors, as well as institutions that are funding our loans. And today, across the Funding Circle platform, across our 5 offices, we now have over 600 employees, and we're backed with over $273 million in private equity financing. Over the past 12 months, we've taken some great strides and achieved some wonderful milestones that we've been really excited to share. About a year ago, we raised $150 million in fresh equity capital. The round was led by DST Global. In addition to DST, a set of really world-class long-term holders came in behind. Then in October, we announced our expansion into continental Europe and went from 2 countries to now 5. And we continue to see opportunity not only in Europe, but in many other parts of the world as well. In November, in an industry first, we also listed an investment trust. It was a £150 million, roughly $230 million permanent capital vehicle, the first of its type. And then in February of this year, we announced that Jorgis Musen, who was a former member of the ECB board, is joining our global board, just beefing up our governance and making sure we have the right set of policymakers and business leaders helping us guide the business into the future. And based on all these trajectories, based on all of the developments we've had over the past years, we firmly think that we are on track to get to the golden age. We continue to believe that the marketplace lending model can become the preferred way for capital to route where it's needed, to the best credit opportunities the world over. And I know I say this sitting here in a moment of economic uncertainty, right? This is perhaps a contrarian thing to say. If you look at, for example, high yield spreads, those have widened, particularly over the last year. investors all over the world are asking for additional risk premia. And this is obviously fueled by questions of where we are from a macroeconomic perspective. Be it questions around slowing growth in China, political instability in Europe, in Brazil, questions around how the collapse in parts of the oil economy is actually going to spill through into different investment asset classes. I think there are legitimate questions around the industry. And what this is raising is additional scrutiny on the space. If you look at what's been in the press for the last couple of months, there are a lot of questions around the level of operational quality controls that are in place. There are questions around how this asset will perform over time, in light of potentially us coming to the end of a business cycle. And there are questions around how stable the funding sources are behind the market. And I think it's incumbent on us as an industry to not put our head in the sand, and in fact, to address these questions directly. And I do think we have really good answers. And I also think that if you think about this as just a natural step in any emerging industry, this additional scrutiny should not be surprising. Any industry, as it emerges, goes through a fundamental catalyst. It then goes through a period of rapid growth, exuberance, and then there are questions. There's a trough of disillusionment where people raise some of the flaws. And it's at that point when the industry needs to come together and be very thoughtful about all of the procedures, the infrastructure that's put in place, the way the industry can be shaped in an enlightened way going forward. And I would posit that's exactly what we're going through today as an industry. I think we have good answers, but I think we need to make sure that they're rock solid as we go through this period of time so that we can get back to a period of sustainable growth and so that ultimately marketplace lending can get to its golden age. And in fact, I also think that marketplace lending is incredibly well positioned in moments of uncertainty. If you think about some of the aspects that come with where we are in terms of the rate cycle, if you think about the compressed yields in many different asset classes, if you think about low interest rates and very thin net interest margins for traditional lenders, and if you think about the continued instability in the banking sector all over the world, these are actually fundamental conditions that are very favorable to marketplace lenders, which really is all about bringing in investment capital to credit opportunities where that capital is needed most. But I think the only way that we can get there, I think the only way that we can ultimately reach this end destination as an industry is to make sure that we perfect 4 vital elements of the model. Firstly, making sure that we have stable access to funding. It's a huge question, and I think we have a good answer to it, but it's something we need to continue to focus on. Second, making sure that we're being very controlled and prudent from a risk perspective, making sure we're understanding the level of risk that we're taking and pricing that risk adequately. Thirdly, making sure we have an appropriate level of operational discipline and the fundamental unit economics of the business are sound. And then fourth and finally, making sure the infrastructure we have in place as well as the level of transparency across the business are such that all of our stakeholders, our borrowers, our investors, regulators, policymakers, and the press really understand what's going and believe that we have a sound way of moving forward. So let me now turn to talk about each of these elements and how we at Funding Circle are addressing them. First, on the funding side, we think diversification in funding is absolutely critical. And when we say diversification, we mean diversity in terms of number of investors as well as type of investors. At Funding Circle, we have a broad marketplace that comprises a fractional marketplace that is primarily retail, as well as an institutional whole loan marketplace. We have a wide range of different parties who are buying loans through the platform. And as I mentioned before, one of the elements of this that provides a very powerful leg to this liquidity stool is the SME Income Fund that we floated at the end of November. It was the first of its kind. It's a permanent capital vehicle. And we see an opportunity not only to expand this vehicle, to provide additional funding sources across the global marketplace, because that fund does buy loans in all 5 of the geographies where we operate, but we also see opportunities to do similar parallel vehicles in many of the other geographies where we operate. This is a very powerful form of capital because it's permanent, and also because for the end investor, it's liquid. It's an exchange-traded vehicle. And so for someone who's looking for a strong equity product with very good dividend yield, we're really excited about this, and we certainly will look to do more of it over time. And we continue to think that there are real advantages of using investment-based capital as opposed to deposit-based capital. First off, With investment capital, there's no maturity transformation. It's a huge distinction between what we do and what a traditional bank does. And because there's not maturity transformation, there's no risk of a bank run, and there's no risk of too big to fail. Moreover, because we're using investment capital, there's much more flexibility around how that capital can be directed. A bank can't even take deposits from one country and direct it into an investment opportunity in another. We can. And moreover, as a marketplace, we can have a broad range of risk tiers so that borrowers of different credit qualities can get accepted at an adequate and appropriate price. Third and lastly, the reason why investment capital is so important and so different from deposit-based capital is because we're not a bank and because we're not doing maturity transformation, there aren't needs to hold inventory. And because of that, the capital requirements for the business are much different. And that inherently makes the model much more stable as well as much more scalable over time. The second main principle, making sure we have adequate controls in place from a risk perspective. Over the past year, we've invested heavily in building out our risk team. In October of last year, Jerome Lalul, who was the former head of global analytics for Barclays Group, and before that, the CRO for Barclays Card, joined us as our global CRO. And in addition to the global team that Jerome has put in place, we have country-level teams led by our risk officers in each of the US, the UK, and continental Europe, who are putting in place a very strong risk governance framework that ensures that the loans that we're originating meet the performance expectations that we as well as our investors have. This governance structure includes providing a 360-degree view of all of the small businesses that we underwrite through the platform. And one of the things that I think is most powerful about the way we approach things at Funding Circle is the way that we're able to translate learnings from one geography rapidly into how we adjust policy and shape the business in a new geography that we might be entering. It's one of the best benefits of our global scale. Thirdly, we need to make sure as an industry we have the right level of operational discipline so that we can grow this business in a truly sustainable way. One of the things that I think is most powerful about the marketplace lending model is the inherent virtuous cycle that comes from the way the marketplace operates. The more loans you do, the more data you're able to generate, the more refined your risk and credit models can be. The more refined those models are, the better your acceptance tiers are, and the more confidence you can have in terms of where and how you price credit. That ultimately leads to a higher acceptance rate, particularly given, again, the effect of bringing in different types of investment to meet the needs of different risk tiers. And that those higher acceptance rates, as well as the improved models, mean that your customer acquisition costs over time come down, which is exactly what we've seen. And I think this virtuous cycle is one of the reasons why marketplace lenders, from a cost perspective as well as an ultimate scale perspective, have so much potential in them. In addition to having this scale benefit, there's also the ability to use the platform to grow globally. What this picture shows is our continental European team as we kind of announced our entry into that market. And I'll point out the purple bear in the center of the picture. That purple bear was made by a Funding Circle USA borrower. So one of the unexpected benefits of being a global business. We can actually use products from one of our businesses to have fun in one of the others. And across all of this, we're never going to lose sight of either our mission to build a better financial world or of our end customers, our borrowers. I love working in small business lending because ultimately we're lending through to businesses that are investing in their own expansion. They're hiring people. They're generating an economic return. That economic return allows them to pay back the loan that we issue. And all of that creates not only jobs, but also economic on-ramps for many people who are underserved. Small businesses in the US account for 63% of private sector job growth. But despite that fact, 55% of small businesses with revenues between $100,000 and $1 million report having an issue getting access to credit. And this problem exists not only in the US, but in virtually every other market where we visited. It's truly a global problem, and we think we have a global answer to it. Because we've been able to deliver a world-class borrower experience, one where the product experience is fast and transparent, where the product is very convenient for the small business owner to use, and also because we couple that with white glove customer service, we deliver industry-leading net promoter scores, across all of our businesses. In the UK, our NPS is currently 90. In the US, it's 86. and it's ticked up in literally every measurement that we've done. And on the investor side, we're absolutely committed to continuing the level of transparency we have in the marketplace, where we deliver clear financial information, loan level detail, and a clear picture into investor net returns. This transparency is vital in ensuring the right level of investor trust and making the marketplace model work over time. On the regulatory affairs side, we've also taken an industry-leading approach. Last week, we were really excited to announce the Marketplace Lending Association, working in close coordination with Prosper and Lending Club, two of the other very well-established marketplace lenders here in the US. That work continues some of the work that we did with the Small Business Borrower Bill of Rights, which we announced last summer. Across both of those, we're really making sure that there's an adequate voice around the responsible development of the industry, where on the borrower side, there's clear focus on fair treatment and transparency, and also clear practices for making sure that investors are protected as well. This work continues the work that we've done in the UK, where we are a charter member of the Peer-to-Peer Finance Association, and we worked very closely with the Financial Conduct Authority to put in place industry-specific regulation that's guiding the appropriate development of the sector. And this stance of being very proactive with regulators is something we absolutely anticipate continuing to do, because making sure that the business does develop responsibly is better for both our investors as well as for our borrowers. So I do think we have a way of getting to the golden era. We can't put our head in the sand. I think the hype cycle for the industry is largely over, and I think that's a good thing. I think if we and other marketplace lenders focus on these four core principles of delivering stable lending capacity, of making sure we're being very prudent and controlled from a risk perspective, of making sure we have appropriate operational discipline in every area of the business so the business can grow, but it can grow so in a very sustainable way, and ultimately where the infrastructure is such that there's a high degree of transparency with strong protections for both borrowers and investors, I think this can be a very powerful and very large industry. And we at Funding Circle, as we think about our 10-year plan, believe that this opportunity is so big that we could be doing $100 billion a year in origination by 2025. That would mean we'd be operating in even more countries where we are. We'd be doing multiple different products, which we're already starting to do. It would mean that every year we're helping small businesses create about 3 million net new jobs. And we'd be serving about 750,000 businesses every single year, drawing in capital from about 2 million investors all across the world. I think we are in the beginning stages of realizing this vision, but again, I think we're on track to ultimately do it. So in closing, I guess what I want to leave you with is a view that I do think we can get to the golden age. I think the path is in front of us, and I think ultimately if we can create a world where small business borrowers and consumers can go online and with a swipe of the phone get access to the credit they need to expand, to invest in certain areas of their lives, and where investors can get stable access to yield, that ultimately has the potential to be not only a very big business, but one where the system is fundamentally more stable, where there's less risk for many players at part, and where ultimately it's better than the systems that have been here in the past. Thank you for the time, and I'd be happy to take some questions.
Yeah, we certainly have time for some questions. We've got some microphones in the middle here. Any questions? One on the left. Hi.
Kind of a virtuous cycle of more loans leading to better data, which leads to better underwriting, which leads to more and better loans, which will help marketplace lenders improve. Do you see that as something that's specific to marketplace lenders, or do you see traditional lenders also being able to benefit from that same kind of virtuous cycle, where they have a much longer history of giving out loans and potentially a lot more data to work with?
Absolutely, it's a great question. So I think there are two distinct pieces to it. The first of which is just the scale advantage of being around for a long period of time and having done lots of loans and pulling all of that data out, which that advantage is open to any type of lender, regardless of whether it's a marketplace or a balance sheet lender. That being said, what's different about a marketplace, well, two things. One, we're building all of this on modern technology, so it's actually much easier to organize the data in a systematic way so we can use it to drive insights. And that's just an advantage of having kind of new infrastructure as opposed to old infrastructure. But the other piece of it, and this is really important, is as a marketplace, we can bring in different types of capital to serve different credit needs. And because of that, we actually can convert loans at a higher rate and serve a wider share of borrowers. And over time, that serves as a compounding effect on that scale advantage that you mentioned.
Awesome, thank you.
Sure.
Do you want to get up and go to the microphone?
There's a lot of companies or a lot of platforms that are losing money today. And how do you see the future in terms of, you saying that by 2025 you can actually give loans for 100 billion, but when do you think the industry will consolidate, and when do you think the companies will start to make good returns?
Sure. So I think some of the headwinds that folks have been talking to are already coming into play, and I think what that's going to lead to is a flight to quality and larger platforms surviving, right? We are in a fortunate position at Funding Circle where not only do we have a really strong balance sheet, but we also have really strong kind of economic progression in each of our core businesses. And so we have line of sight to profitability. We're unit profitable in many parts of the business. And so I feel very good about our ability specifically to get there. And if anything, what you'll see is some level of consolidation where potentially smaller players team up with larger players. Perhaps some smaller players go away. And if anything, that's going to make those who survive all the stronger because there's going to be less competition in some customer acquisition channels.
Mm-hmm. Anybody else? Oh, I have actually one question for you, Sam.
Sure, Peter.
So, you guys are in more countries than anybody else. So, where are you? What are attractive new regions for you guys? What are you looking at as far as more expansion?
So, we're really excited to continue our expansion in continental Europe. And we certainly see big small business credit opportunities in many of the different economies there. Beyond that, I think Canada at some point is something we take a close look at. And again, I go back to the notion that small businesses, I think, are poorly served in many different parts of the world. So over time, this marketplace model will work, I think, in more countries than we're currently in. And over the coming years, I'd expect us to go from 5 to more than 5.
Right. Okay. Any other questions? No? Okay. Well, thank you very much, Sam. Appreciate it.
Thanks, Peter.
Okay. Thanks, mate.